And let's start rolling here. Okay, guys. Again, welcome everyone to another seminar of Elliott Wave Forecast. We kind of did it this week kind of early. Is because as many of you guys know, we've been doing uh, we've been doing an Spanish uh, Elliott Wave class over the weekend. So we want to finish kind of early today so we can have some rest for the rest. I mean, we can get some rest for the day, for the rest of the day. So let's go over the market. And if you guys watch it, the video last night, or the weekly video, better say, you guys should understand what we are expecting. We believe last week in review, we mentioned the idea when last week opened, the market was over here, and we say that it's going to make a correction. That's exactly what the market comes and did. Right here, you guys seeing the dollar and seeing the S&P in blue. So technically, the dollar did make the correction. Now, it makes a marginal new high, new low right here. That makes that from the high, you got 5 swings. So that gives me, in some degrees, that's telling me and translating is that the dollar has more downside. Now, I want you guys to look at these three days or important days in the market. July 24, September 14, and November 16. Let me explain to you guys what you can relate on it. Like many of you guys know already, the market runs in cycles. Cycles that they runs and cycles that they begin and the end. Cycles sometimes can get complex. And the dollar, if we take a look, is testing twice. He tests 3 times the 50% back of the September of the cycle from the 14th of September to the 16th of November. It has bounced 3 times out of those lows. Now, we don't have, and believe me guys, when we say this, you guys know how good the trend report that we run it is. I mean, I don't want to sound bad, but it is very accurate, if we can put it like that. We did 110 charge yesterday, and we don't see any one of them yet that say that this cycle ended. So the market remains the same. When still there is a possibility of the double correction. In other words, still the dollar can do this, this, and this. And consequently, the whole market consequently can get into the same scenario. The S&P can go to 1426, 1430 and drop very low to around 1280, 1270. I mean, it's even possible that the S&P can even do that. All I'm saying is that there's still no, I mean, there's still no honeymoon in the market. We still have to live with the 1 hour trend, to be honest to you guys. We still have to live with the 1 hour trend. And remember guys, traders, they need to understand sometimes one thing. When the market is not clear, you gotta take what the market is giving you. Consequently, you gotta take at this stage the in my opinion, the most clear thing in the market at this stage is that there is 5 ways down here, and we should get a 6 and a 7. Don't you agree, Louis? I think that that's the most clear scenario that we have in the dollar in the overall market, at least short time frame. That we have that structure, and then like we told you guys last week we say it reached the 50 back, and we say the recovery of the 50 back is gonna dictate which one or the other. Also, there is a factor here, which is the time factor. Look, that's almost 2 months of trading. You cannot pretend that it needs some time and price in order to complete. We can say it like that. That sort of correction, if it's gonna get double. Honestly, right there is nothing that say if it's gonna go into the double or if the top is in. The euro, the dollar at least, and the S&P, both of them, they reach the 50% back, which is enough. And like we say several times, only the CAD and only the dollar index reach the 50% back within the US dollar group. So, like I say, out of the 110 charge, nothing has said otherwise. Now, what I'm trying to say is that there is no data that say that this correction is over and that the big move in risk off just started. There is no data that say that. Otherwise, there are data that say that we're going to get into a double correction. There are data that say that we're going to get into a double correction. All right? So we're going to cover that during the seminar. I mean, there is data that say otherwise, to be honest with you guys. All right? So do you guys understand here the cycles? We are correcting this cycle in the dailies, the one that started on July 24. Do you guys understand that? We are correcting that cycle. There is no data yet that say that correction ended. Usually when the correction ended, the reaction is strong, and that the reaction is strong, and the market react strong, but the market, it give you the hint on the earliest stage. In other words, but this time we should have known already. We should have known already. That's what makes me suspicious, that at this stage, and you know that, Luis, at this stage, we should have known already that the new cycle to the outside has started. We should know already at this stage, and we haven't seen it. And that makes suspicious to me that we are in the B way. Now, I don't have confirmation either side. We are in the same market that we were last week, when it can go, I'm sorry, I don't make the market, we just forecasted. It can go, honestly guys, both ways. It can go both ways. All right? So the market can go both ways, and consequently, we got to be very, very, very careful. We got to be very careful with the market, either side. That's all I can tell you about the dollar. You got to look at this chart. is more clear. 1, 2, 3, 4, 5. Like we say today in the class, a marginal new low, but not to the 1.236. It makes me to believe that that's a double correction. It makes me to believe that that's a double correction, and it makes me to believe that the market is gonna go lower, at least sometimes at the beginning of the week. Now, this is more important than any other chart. This is more important than any other charts if you're going to take a look at it. Why? Because this market right here, you got 1, 2, 3, 4, 5. So these have two paths. Either it's going to go here is the most aggressive one. That's going to put the euro at, the euro dollar around 29.52, and from there the euro is going to make another 3 weeks, and the dollar is going to make another 3 weeks. The other alternative is that this is going to make a flat, and we're going to see a set-off in risk this Monday, and the market is going to get in some sort like a flat over here before going lower and another 3 weeks. But the idea that this low is below this is bearish the dollar, one way or the other. No matter what the market is going to do, is bearish the dollar. Everybody understand that? The idea that there are 5 ways in this rally, it makes clear that there's going to be another 5 swings. That there is going to be more downside. The idea that from here up to here, we're going to get more downside. And that also is going to let you guys know that there is going to be some sort of more risk on. Now, taking a look at the S&P in 1 hour is the same as the dollar. Look. 1, 2, 3, 4. 1, 2, 3, 4, 5. You need a little bit more to the upside. So technically, if you look at it, the 4-hour trend in the market, it remains to still bearish. It remains bearish. And consequently, you need to understand that still the 1-hour trend in the market, it is bullish. So onto the honeymoon pass, like we call it, and Louis, that's getting famous. Everybody now call the honeymoon trade. We should trademark that. Until the honeymoon doesn't happen, the market is not clear. Now, you can see different things. For example, right here, there is a pair that is telling me something. If we can put the Aussie dollar over here, the Aussie dollar is showing a very nice Elliott Wave structure from here. 1, 2, 3, a pullback, 1, 2, 3, a biggest pullback, 1, 2, 3. Aussie should do this, which in some degree is confirming you that we're going to get more outside in risk. Now, like I explained to you guys today, Aussie do not correlate with the dollar. Look, a bullish Aussie dollar and a bullish dollar. You guys on the Spanish side, you guys see that, right? how they do not correlate. So, but in some degrees, is some sort of risk on. So, I believe that we should continue this week doing what we did last week. That either one of us, Daoud, Luis, every one of us, we send some sort of trading recommendation. I mean, so, and then you got to take the market with a little bit of, we sort, in other words, you got to be careful, but you got to keep buying risk until the 1 hour trend change. Because it looks to me that they're going to be, that they're going to be, that there's going to be more, a little more outside in risk. At least that's very clear to me. That a little more downside in the dollar is going to happen. Now, you guys need to take a look. And the next level of interest is 79.65, 79.70 in the dollar. That's 130.93 in the euro dollar. And I think that we're going to see those levels. The market also can be doing some sort of flat. And like I say, it's, at least in my eyes, the market is very simple and very clear. We are still within the cycle of November 16. That cycle is not completed. That cycle is not, that cycle is not completed. So I believe that that cycle is going to extend a little bit more before any sort of completion of the cycle. That's my guess, to be honest with you guys, after doing yesterday's charge. Also, I want to mention to you guys about Cooper. Look, Cooper is in a very specific level right now. And I tell you why. Because Cooper, in my estimation, it did 1, 2, 3, 4, 5, 3 weeks back. And now it's ending what it looks to be another cycle of 5 weeks over here. So Cooper can be finished. It can extend a little bit more, but Cooper can be finishing a cycle from the same middle of November. And like we told you last week, if Cooper was bullish, the risk on trade is going to be bullish. So if Cooper is going to become bearish into 3 weeks correction, the whole market is going to be bearish into a 3 weeks correction. So I'm expecting for this coming week some sort of risk off. Maybe, I'm going to tell you, it looks like, I don't know if you guys can notice, it looks like that I'm repeating the seminar for last week. Don't you guys agree? It's the same market. It's the same market. It's the same market that last week. It's absolutely the same market as last week. So We gotta be ready. We need to understand what we are expecting. We are expecting a possible continuation because Cooper also can do this. Do not necessarily needs to be, I mean, this is how Elliott Wave is. And Cooper then, it can do, I mean, I don't like it, but I can, I mean, A, B, C, W, and then A, B, C, Y. I don't like it. And then, I mean, or he can do a 4 and a fixed swing and then become more bullish then. Doesn't necessarily Cooper needs to do a big correction here. Cooper can do this and another 5, and that's 5 weeks. But I'm expecting, honestly, Aussie, Leon, Aussie is being in his own world. I don't know if you have noticed that. Aussie is being in his own world. Now, the question that you asked me about Euro and Cooper is because I believe that this is 60 minutes, right? Yeah. 1 second. Look, if you put Euro with Cooper, they are some sort of correlated. So maybe the low in Cooper is in, the low in Euro is in, and now the Euro is going to do this and decline. And Cooper also can extend a little bit and decline. All I'm saying is that the reading of Cooper is telling me that the cycle, like I say early at the beginning of the seminar, that the cycle from the 16th of July right here at the beginning of the month in both of these pairs is coming to the end. And it should come to the end this coming week. You see what I mean? Both cycles should end this coming week. Exactly. Because it's going to happen is, like Greg is telling me, I'm going to have you as a consultant into that. Or Cooper can even also nest. Nobody know. Exactly. I mean, Cooper can do this and finish 5 ways in some sort of diagonal 535 here. Like this. And then a decline, then the Euro can do this and make the last swing higher. You see, Leon? Great. That's one scenario right there. That scenario should be unbelievable, amazing, because that scenario, 5 swings in Cooper is what the doctor ordered. Exactly. That's what I say, Leon. That in my opinion, sometimes Tuesday, Wednesday, it's hard to say the day, but sometimes during this week, we should see a correction to the whole cycle that started in November 16th. You got it? Everybody got it, right? We believe that that cycle should end sometimes this week. And then the correction of that cycle or Cooper making a 5th way is going to tell us which way we go. Right? Now, if you put Aussie here, you're going to see that they are correlated, but they are not like 100%. Aussie also is calling for another rally to the outside, very clear. And then a big correction in Aussie. Euro Aussie is, and I believe that the dollar and the risk on in general is gonna, in some degrees, is gonna top first than Aussie. The Aussie is gonna be stronger than the euro in the decline because I'm finishing 7 swing from the lows in the euro Aussie, which makes me to believe that the euro is gonna be weaker than the Aussie, or the euro is gonna top first than Aussie. That's what you get out of the euro Aussie. You see what I mean, Greg? So that's the reading that we're getting for the weekly update. A very clear market that we should be able to finish in some degrees this week. We should be able to finish a cycle. This week, we should be able to finish a cycle. And some sort of risk on can happen when this cycle ended. And this cycle, I want you guys to believe this. This cycle can be also, if the market is going to get into a big way, I don't think the market can do this, guys. It can be like this. And from here, the market can rally. You guys need to understand that that is possible. And that's a possibility in the market. There are 2 instruments already showing this possibility. 3 if you want it, but 2 they're showing already, which is the Dow Jones and Gore. Gore and the Dow Jones is already showing that possibility. Right? I beat you there. And NASDAQ also, Greg, is showing the same. So don't discount the possibility of a big wave. But we don't have confirmation to labor, and we got the minimum target right here. In our system, when this situation happens like this, you got to go with the 1 hour or wait for the honeymoon because this is too big. Now, how are you going to believe this? Look, how are you going to believe this? Yeah. This is very stranger. And I'm going to be honest with you. I'm always going to tell you guys the truth in this. Look, this is very strange. You see that? It's an 100% retracement. Almost. And still, our system that called the move when the system is right here, when there is the real move, it hasn't confirmed that it is a real move. When you see that, you need to start thinking about flat. Rich, it's very hard for me to say when the cycle is gonna end. All I know is that we should end a cycle this week from the 16th of November. And then we should see a risk-off move for at least into a 3-week of risk-off. So you see, Greg, how deep this is, right? Still no confirmation in any time frame that this is a strong low or a strong pivot that we call in our system. No confirmation. It's the same that it did here. You guys remember when we were here that we called this move perfectly in that? You guys remember that, right? It's the same scenario. We were over here and still don't call in the high. This is the same. Now, it can be a running flag or it can be an irregular, and then it's going to go here and fall out of the planet Earth in a huge set-off sometimes within the next 2 weeks. That's a possibility. Don't discount that. Another one with the same scenario is the UK index. We can be in for a big correction and risk off. Look what it is. Still, it's not showing otherwise. As far as you know that should have a little more outside and there is going to be a decline, doesn't matter what label it is over here. Doesn't matter. That doesn't matter. But you got to be ready that the recovery in risk is not looking strong. As of right now, it's not looking strong. And you always need to have that door open that a bigger correction in risk can take place. All right. Now, another one showing the same path is the S&P 500. A very interesting week. I was hoping the same last week, but it didn't happen. Look, S&P 500 5 swing should get a little more outside after this consolidation. I wish if it tests 1400, if it tests 1400, should be a very nice should be a very nice, interesting buying opportunity in the S&P. If it goes there, should be a very interesting buying opportunity into the equal legs over here. Or at least the 1427 if it goes to over here 1400. So buy an S&P at 1400 with a 1390 stop loss, looking for 1427 or 1452. It's not a bad trade. You see, Greg? It's a clear-cut 5-way swing from the lows. So that's why we believe that at the beginning of the week, maybe by Tuesday or Wednesday, we're going to see, if it's not tomorrow, a rally in risk off and risk on. And the cycle from the 16th of September is going to end. And the decline after is going to let us know which way it goes. If we take a look at the Dow Jones, for example, and the Dow Jones, if you guys are curious and understand what we're doing, in the case of the Dow Jones, we have a lower target. We got a target in the Dow Jones, which is in the trend report, the daily trend some sort of, I mean, it's different. The Dow Jones is the trend of the Dow Jones is telling me that this law is gonna be broken. Not necessary, but it's telling me that this cycle ended in the Dow Jones. Believe it or not. That's what the Dow Jones is telling me. And that the target is 12,033. So that's enough to be careful about the risk on trade. And that's the one that is going to be an amazing honeymoon for us, because I don't care if the market goes to 1700 or goes to 14 or it goes to 11. As far as we are in the right side of the market, that's all you need. All right? And we got to be very careful about it. We got to be very careful about that, because we're calling 1235 on the Dow Jones. No, great. This, my man. You don't know me. I know what is the most likable path. So, in my opinion, exactly. In my opinion, look, this is the daily. People that took today class, you guys gonna know. No, I cannot show you here. When I go to the center, Dow Jones is calling this. Honestly, at least, is calling that. And most likely that's gonna drop the whole market down. It's the only one that is calling that. It's the only one that is calling that out of the whole group of indices. Now, if we go here, this is the daily chart, and we put let me see if I have it here. I always get confused. Silver is if we go here and we put gold, let's see how gold react with the Dow Jones. You guys are gonna see something. Yeah, correlate, down, recover. You guys can see the correlation with the Dow Jones is not 100%, but gold also is calling that the market is gonna do this. Now let's see gold. Let's put the dollar in the middle of this. So lower dollar, of course, higher in some degrees, higher gold. Right here, higher dollar, lower gold. So we gotta be careful with the bullish side. Or I can tell you, we gotta be careful. I got these two. If you take a look at the trend report, both reports in down and in the Dow Jones, in the Dow Jones and gold, both are to the downside, if you guys notice. So with that in mind, you guys need to understand that, with that in mind, you guys need to understand that you guys need to be a filter. Yeah, that's silver, Luis. That's silver. But this is gold. What you see on the chart is gold. Gold is calling lower. Dow Jones calling lower. And I have a very large move and fast that hasn't told me that the market is going to explode to the downside. So, thank you, Luis. You saw the message that I posted about the trading idea. So, we got to be careful with that. We got to be very careful with the risk on. And don't discount, I'll be honest with you, don't discount this scenario, guys. Don't discount that. We have no confirmation. That's why you guys need to be smart. The dollar, it has a little more downside, but the dollar can do a double correction if the Dow Jones, if gold, they're gonna drop. Do you guys understand that? Let's take it state by state. Let's take it state by state. Also, another one that is showing something to you guys is this one. Look, I'm going to put you guys the S&P 500 here in the 4 hour. The good thing is that we know when it change, it's going to be a honeymoon for the next 3 or 4 days, 3 or 4 weeks. Okay, this is the S&P 500. Now, if we take a look here, we know buyers. Let's be smart. No buyers. I'm going to show you guys this. I'm going to put to you guys the dollar yen. And you guys will be surprised now. Look at the correlation. Lower S&P, higher dollar yen. So they are very well correlated from there. This move, it needs another swing higher. After the dollar yen is going to end a move that started right here. So if they are trading here, this move also is going to end. So I'm expecting some yen weakness after, which technically is risk off. Now, if we put the Aussie yen, let me see if I have it here. If I put the Aussie yen that correlate unbelievable with the risk assets, guess what? And the CAD yen, guess what? You're going to need Look, let me do the Aussie yen then. Look, Aussie yen. From here, it needs also a little bit more outside, and a big cycle from here is ending. So if Aussie yen, look at the red and the S&P. Right here kind of brought the correlation, but if you want to see the daily chart of the S&P, is the same as the daily chart of the Aussie yen, for you guys that don't know. So I don't want to take size, to be honest with you guys. I want to take it like we're doing, step by step. But look at that side. That chart there in red compares to the S&P 500. So all I'm saying is that at least this cycle right here should end in the yen group. And that's going to bring the market down here before going higher again. The yen right here, it can do this, and it's going to most likely correct the whole cycle. And the dollar is no immune to this. The dollar will follow risk on. If we put the dollar here, the dollar will follow risk on in some degrees. So technically, the only way the dollar can do that is making a move over here to let that everyone finish the correction. You see, guys, what I mean? So step by step, let's play it like this. The cycle from November 16 should end this week, most likely. And then after that, we should get a resolution of the cycles. Either the market is going to explode in favor of risk on, but always remains in your mind, gold and silver, gold and Dow Jones, they're calling otherwise. Also, finally, I want to show you guys the EBEX. What the EBEX is telling you. 1, 2, 3, 4, 5. Like we explained on the video yesterday. If you look at the RSI, the idea that you see one channel, two channel, this channel broke below this low is telling me that this is ABCWS, ABCY. You see, Greg? That's what it's telling me there. So after, what's going to happen? After, what's going to happen? After, what's going to happen? It's going to be a decline in risk. Which day is this? November 13, the same cycle. This cycle is meant to end within the next, most likely 5 days, if we have a regular market. If we have a slow market, of course, ain't going to end. But after that, it can go either here and here. But if it's going to break this low, we should know over here. So that's the market, honestly, that we see for this coming week. Everybody understand that? Yeah, I think it's very clear. It's being smart, guys, no heroes. All right. Now, I'm going to give you guys an opportunity to ask questions about what. Yeah, Euro is going to follow EBEX. Euro is more correlated with EBEX than nothing else. Believe it or not. Now, guys, any question that you guys have, I mean, we are here to answer. So I appreciate if you guys can ask some questions. If you guys have some question, I will appreciate it if you guys ask questions, and I want to be answering questions to you guys. The Dow Jones, like I say, the Dow Jones 1 hour trend is up still. It's not a sell still. But we are expecting a lower Dow Jones unless our system is cheating in the case of the Dow Jones. All right? What trades do we like for this coming week? We like a long, yeah, you should wait on the S&P. We like long dollar yen for one more swing higher. We like Euro Aussie for one more swing higher. We like Aussie dollar for another swing higher. Those trades that we like right there. That can be possible, Greg. That the Euro Aussie is not an impulse to the outside. It's very possible, and it can be a sign. But remember, the first leg of the Euro Aussie is very questionable also. You know that. So that's why I'm not using that one as a proceed. You see what I mean? But also it's corrective. It's corrective. That is not, it's undeniable. It's corrective, it's undeniable. Okay, the Aussie yen, I got my doubts about that one. Maybe, let me show you something about the Aussie yen. I think it's doing maybe a wave 4. Let me tell you why. I started to like this scenario. In the case of the Aussie yen, I started to like this scenario. Instead, because you got two ways around. Technically, you can cut, you can call it like this is W instead of 8, because he did something iffy, if you want to know that, around these areas. He did something very iffy about this area, because I can make the case that this count is also correct. I can make the case that, let's say, that this count, sorry, is correct. Look. I can make the case that this count is also correct. And I have no issue with the count. If that count is correct right there, then you got A, B, C, W, S, and then you got now 8 right here, and you are in the big way like every one of the dollar yen. You see what I mean? That's a possibility there. You see, Greg, that's a possibility. But the other way is that this is A, this is B, and then now, instead of being A and a B, you are in a wave 4 from here. When you have 1, 2, 3, 4, 5. You see what I mean? That's another possibility there also. But I tend to believe that there is more outside. I tend to believe that there is more outside one way or the other. That's it. I mean, it should trade to at least, like, you know, if it does the low, should trade to at least 87 area. You see what I mean? That's a possibility. Now, the Euro Aussie is the same. It's what we spoke today, guys. This is very clear and clear trade. Guys that took the class today in Spanish and the one that took it in English. This is a perfect double correction. A, B, C, W, or can be also a leading diagonal. Let me see the RSI. It's a double correction. Now, this high right here is the 618 of the first three legs. As you guys know what those mean. So it should see a continuation higher from around 123.87. You see what I mean? You should see outside from there, Marco. But also, when that cycle ended, what that cycle telling you, what that pair is telling you there, in my opinion, is that Aussie is going to get into a double correction as it is before getting to the 103.60 or 103.60 area, or one to get the order that we have right there, because we're going to see some Aussie win next before the next move. All right? Any other question, guys? I believe that Aussie is going to do this. It's going to get here. Aussie can do this. Before higher. Any other question? The euro, I believe, like I say, the euro either is in the most bearish scenario, which is the flat in the dollar, but I doubt it that is the flat. But let's see if it happens. Because the decline here is in three ways. I believe that the most likable in the euro is this scenario. From here, make another three ways higher to around the 30.92 area. Any other question, guys? S&P would like a loan from 1400 to another extension. Yeah. Any other question, guys? We don't say, come on, guys. We don't say that the Dow Jones is down. You guys need to follow the charts and the trend report. Now, cable, what I'm saying about the Dow Jones is the daily trend, is the highest degree trend. I'm not talking about the 1 hour trend. Now, cable is about the same. The whole dollar group is immense, guys. Cable either is going to do a flat 1, 2, 3, 4, 5, or cable is going to bounce from here and go higher. Any other question, guys? Okay, so no more question, guys. See you guys later. I think everything is clear. A little more risk on before the cycle for November 16 end, and the nature of the correction is gonna dictate if it's gonna go all the way down in a big move or risk off, of if the low is the low on November 16. At Dow Jones and Gore are calling otherwise, and consequently, we need to be careful with the risk of with the risk on trade. The trade is being very deep, and consequently, it hasn't still mathematical, hasn't shown any signs that is bullish. So with that in mind, we gotta be careful. Gore is calling from this, and if Gore is gonna do this, look, this is October, this is September. At the end, if Gore goes down, most likely the risk of trade is gonna go down. All right. Thank you guys. Aurora. See you guys later.